Now, China aims to increase its support for Africa's infrastructure investments. That's according to the official white paper on China and Africa's Economic and Trade Cooperation released earlier on Thursday. That document notes that Chinese enterprises have helped African countries to improve their road and telecommunication networks, among other things. And that's a trend that's set to continue in the future. CCTV's Michelle Ching has the details.
Despite the sluggish global economic recovery in recent years, Sino-Africa trade development has maintained rapid momentum. In 2012, Sino-Africa trade volumes reached close to $200 billion, up nearly 20% from the year earlier. China's direct investment in Africa almost doubled from 2009 to 2012 to $2.5 billion. The fields of investment expanded from agriculture, mining, and building industry to processing of resources, manufacturing, and services industries.
Increasing domestic demand in Africa and the stabilizing political situation both contributed to China's increasing investment in Africa. Chinese companies are also becoming more mature and more capable of investing abroad. China and Africa's economies are complementary to each other. So investing in Africa is beneficial for all.
With more Chinese firms expanding into Africa, the pressure is on to carry the social responsibilities, such as ensuring local employment and caring for the local environment. Li says most Chinese companies are obeying the rules, but as there is a wide range of companies investing in Africa, it's difficult to monitor all performances.
Social responsibility has become an important issue when talking about investment in Africa. Most Chinese companies are very aware of it. We have seen mining companies' Chinese employees teaching the locals agricultural techniques to better their livelihoods. Of course, not all firms are doing the same thing. We are starting to train these companies before they go abroad and punish the ones not following the protocols.
China has also seen a substantial increase in its support to African infrastructure projects in the past years. In 2012, Chinese firms completed construction contracts worth $40.8 billion in Africa, 45% more than the levels in 2009. According to the paper, China will further increase infrastructure construction in Africa to improve people's livelihoods and help Africa to improve its capacity for future development. Michelle Xing, CCTV, Beijing.
Speaking of infrastructure investments, let's give you one particular example. The China Road and Bridge Company has delivered on a contract to construct berth number 19 at the Kenyan port of Mombasa 2 months ahead of schedule. Now, that new berth is expected to increase handling capacity at the port and to cut delays in the amount of time it takes to process and clear cargo from that port. 3 presidents from the East African community presided over the official launch of the berth on Wednesday.
We are very pleased that they were able to complete the project ahead of time and within budget. They completed it 2 months ahead of time, and we are very, very happy with their performance. They have shown a work ethic that the Kenyan contractors now are emulating of hard work, very hard work and diligence. And we are happy that our contractors now are also catching up with the Chinese contractors in terms of work performance.
China Road and Bridge Corporation won the bid for the port project in January 2011, which is the first expansion since 1984. CRBC as a company gained the opportunity via our technical advantages. The project will largely improve capacity for the seaport and raise it to 240,000 tons of standard containers, increasing capacity by about 30%.
Now, even as the Chinese government moves to put in place a policy to enhance diversification of its trade with Africa, as we've just mentioned in that white paper, Chinese companies operating on the continent have been hard at work developing opportunities in different sectors other than commodities. The Beijing Construction and Engineering Group of BCEG is one such firm. It has been constructing various governmental houses in Congo-Brazzaville. The company is now shifting towards the construction of apartments targeting the African private sector, while at the same time helping improve standards in construction. Now, companies like these are addressing the pressing need for reliable, affordable housing in Africa, as evidenced by an upsurge in businesses following a blast last year in Congo's capital of Brazzaville.
We do quality construction of houses because we want to convince the world that in building, Chinese are the best. We can't afford to taint our name because we want to remain the best in the world and the most reliable in terms of construction.
Turning over to the B in the BRICS, Brazil is stepping up its engagement on the African continent by cancelling the debts of a dozen African countries. As CCTV correspondent Paulo Cabral explains, it's been paying off, with many countries reciprocating by signing large trade deals with Brazilian companies.
Earlier this year, Brazil's Embraer, the third largest aircraft maker in the world, closed a $67 million contract to sell planes to Senegal. The deal was only possible because a month later the Brazilian government pardoned Senegalese debts, reinstating the West African country's credit in Brazil. Brazil forgave debts racked up by a total 12 African countries. Congo-Brazzaville owed Brazil the most, an estimated $352 million. Tanzania had the second largest debt, $237 million. In all, Brazil cancelled or restructured a total of around $900 million in African debt. In Tanzania, Brazilian contractors hope to land contracts for big infrastructure projects, such as the hydroelectric power plants and airports the government plans to build. And Brazil's national energy company, Petrobras, wants to invest in offshore oil production on the east coast of Africa.
Companies can make great deals in Africa, but from the government's point of view, this goes beyond business. Brazil also plans to reap political gain from this attitude. It actually has already helped to secure strong African support in the election of Brazilian diplomat Roberto Azevedo as Director General of the World Trade Organization in May this year.
Remember that Brazil, over the last few years, decided to become a more internationalized country, more globalized, and Brazil has wanted to play an important role in global governance.
It appears to be paying off. The BRICS countries, which include Brazil, China, India and Russia, are now Africa's largest trading partners. The African Development Bank forecasts trade between Africa and the BRICS countries to reach $500 billion by 2015. Paulo Cabral, CCTV, São Paulo.
Now let's move on to Egypt, where the cabinet has approved an additional 22.3 billion Egyptian pounds in spending on investment projects to boost the economy over the coming 10 months. Now, the army-backed interim authorities are keen to improve conditions for a deeply polarized population battered by more than 2 years of political and brutal economic turmoil. With the details, here's CCTV's Yasser Hakim.
An economy in distress, public debt exceeding $200 billion, a budget deficit at 14% of GDP, not to mention the rising number of unemployed people. But the government says it has a plan.
We are trying to activate the economy. We are trying to impose financial discipline. And finally, we want to do both of them in a way that achieves social justice to the extent possible. How can you be expansionary? At the same time, you don't want to have a budget deficit that's growing so fast and hugely.
To stimulate the economy, you have to spend more. But with a budget deficit, greater spending would need to come from increasing taxes, an option the minister says he would not like to take.
By bringing in funds from outside the country, by seeking support, by counting on the friends who can provide us with some injections of funds from outside, because by doing that, you are not raising taxes and pushing the economy into contraction. We believe that activating the economy should be through increasing the demand side, the expenditure side, if you like, but investment, not necessarily consumption.
Fear of public unrest has also stopped the government from reducing subsidies, initiated by the previous leadership and demanded by the IMF and the World Bank. But critics say to rely only on loans and foreign investments is a risky approach and may be overly ambitious given the current barriers.
The bureaucracy in Egypt has been a major obstacle for investors. The government has been very slow in addressing it. Also, until security is retained, no more investments will flow in. They should not depend on investments for now.
In spite of the challenges, Minister Galel stressed that he targets a growth of 3% and reduction in budget deficit from 14% to 9% of GDP by the end of the year. The World Bank placed Egypt in the top 5 countries that face a slowdown in growth. Analysts say if the government does not act quickly, then the effects of the slowdown will soon be felt with renewed violence and unrest in the streets. Yasser Hakim for CCTV, Cairo.
And that, ladies and gentlemen, is the answer to the question of what John Maynard Keynes would do. Let's get the latest details on where that money will be going by CCTV's Yasser Hakim. Is live in Cairo tonight. Jones is on the line from Cairo. Yasser, $3.2 billion in stimulus spending. Where exactly will it be spent?
Mainly on infrastructure projects, unfinished projects from the pre-2011 revolution, in addition to also new projects, mainly in schools, hospitals, medical centers, silos, 10 silos, roads, new roads constructed, all of them in areas outside of Cairo and the main cities, mainly in the rural areas and in the poor areas of Egypt that have been widely neglected in the past 10 to 20 years by the former regimes, and this government is targeting this money to this part of the population.
Given, however, the state of Egypt's economy, GDP growth has been slowing down, tourism income has been going down as well. Taxes, of course, have been a very contentious issue. How exactly is this extra $3.2 billion stimulus package going to be funded?
The minister said it very clearly, Minister of Finance and the Prime Minister. They said, from our friends, from our neighbors. He means the Gulf Arab states, who said that they will stand by Egypt economically. They've already promised $12 billion. Already most of the money is in. Part of it has been put in the budget, and this $3.2 billion is part of the $12 billion given by the Arab states, and will be placed into this part of the economy to stimulate the economy, like he said, to make more jobs and to help change this kind of recession that's happening at this point.
Indeed. At the same time, though, Egyptian authorities are not willing to cut spending on subsidies, and they're not going to raise taxes either. So how are they going to maintain that target of cutting the budget deficit down to 9% of GDP?
Right. In subsidies, you have to differentiate between two types. You've got the subsidies on energy, and that's around 70% of all total subsidies. You've got food and basic necessities, that's the 30%. Now, they said they will not touch on food and basic necessities. They will not touch on fuel for consumers, citizens, but they will reduce the subsidies on heavy consumption of plants, plants that heavily use energy. And that will be over 2 years. They will reduce subsidies on that until it goes to the international prices. And this will very much reduce the budget deficit, because that's a big portion of the subsidies. It's the subsidies on energy for plants, such as cement and electricity and so forth. Now, the other side is another $800 million will be injected into two highly important sectors, that is the real estate and the tourism. Now, if those two have been injected with $800 million that the government said, it will put in large projects, huge projects for the private sector in those two sectors to work. They will make more money, they will employ more people, they will pay more taxes, and this tax revenue will increase, and thus the budget deficit will be reduced as well. So he's moving the economy through two important sectors, the real estate and tourism, and that will make more revenues from taxes, and from the other side, reduce subsidies on energy for the plants and firms.
Indeed, it will be interesting to see exactly what effect that would have on the competitiveness of Egypt's manufacturing sector, but unfortunately we have to leave it there for the time being. Thank you very much for that. That's CCTV's Yasser Hakim live in Cairo with the latest details on its economic and Keynesian plan to yank its economy out of the doldrums. Time for a short break. Here's what's coming up next. Gold producers in South Africa preparing for bruising strikes. It could start as early as Sunday. We'll be live in Johannesburg when we come back.
BizAsia. Asia means business.
Welcome back. Gold producers in South Africa want the remaining union, Solidarity, to accept the offer they have laid on the table, saying they cannot go any further up. Now, the producers, including AngloGold Ashanti, Goldfields, Rand Uranium, Harmony Gold, Evander Gold, Sibanye Gold and Village Main Reef, called a press conference on the sidelines of the mining summit earlier on Thursday as the deadline came and went for Solidarity to accept or reject the final wage offer was on the table. Gold miners have threatened to down their tools from as early as Sunday in this particular matter, in a strike that could last for up to 3 months, according to some observers.
There's been quite a lot of debate, and I've heard that the gold producers are holding back and therefore have another offer in their back pockets. That is not the case. This is the final offer. The offer remains on the table, and we remain open to conversations on the offer.
Now let's look at this debate on pay from a completely different angle. Better pay obviously has dominated the debate when it comes to reforming South Africa's mining sector. Less prominent, however, has been the issue of transformation and women's underrepresentation in the extractive industry as a whole. It was, however, one of the hot topics of conversation at the just concluded mining summit in Johannesburg. CCTV's Angelo Coppola was there.
While stakeholders focus on increasing the number of women in the mining sector, industry analysts tell us that the number of women in the sector compares favorably to other developed world mining countries. But it's not enough.
We are seeing a lot of women coming through, mining engineers, but the pipeline is still quite slow regarding women in mining. So it means then the industry needs to put in far more than, let's say, banking.
Government is keen to get the numbers up. And while they don't want to preempt the 2014 deadline for mining houses to meet those targets, they are getting impatient.
We're not doing enough. Reality is that this industry over the years has been dominated by male. It has been male dominated across sectors from top to bottom. It's an integration process that is taking slower than what we anticipated.
It appears that there is no shortage of women keen to get into professional positions, and this may be a solution to the current impasse. But there are issues that need to be resolved.
I think we need to change the environment. We need to make sure that it's safe for women to operate underground. They can't hold senior leadership roles if they don't understand what happens day to day underground.
While there are policy imperatives, targets and charters monitoring the pace of transformation, the new blood entering the sector sees other challenges.
I think for me it will be because I'm young and my age, the crew that I work with might find it intimidating.
There's no question that transformation is a major issue in the mining sector, and there's also no question about the fact that it hasn't reached its targets yet. There's some good companies, there's some bad companies, and there's some average companies. Government is pushing it, the charter is in place, they will be reviewing this whole issue in 2014, but as it stands now, there aren't enough women in the mining sector. I'm Angelo Coppola for CCTV in Johannesburg.
Angela Coppola, of course, is live in the heartland of South African commerce. He joins us now with the latest details from Johannesburg. Mining executives, Angela, quite concerned about some proposed changes to the Mineral and Petroleum Resources Development Act. What are the key flashpoints for them?
Well, I'm going to raise three. First of all, there's the strategic minerals list, and most of the miners are concerned because if that comes into play and a mineral gets declared a strategic mineral, it gives the government certain powers. On the other hand, Joel Nichitenza, who's an ANC NEC member, was at this conference today, and he said that that list of 20-odd minerals is a proposed list. It's not final and it's not complete. The interesting thing is that he was actually sitting on the panel at Mangaung when the report was presented to them. So there's a bit of a mismatch between what the miners see as that list and what the NEC or the ANC sees as the list. But that's one of the issues. The second issue is the whole question of the minister looking for some unregulated discretionary powers that she wants, which gives her the power to interfere or intervene, let me put it that way, in the business affairs of some mines if she feels like it. So there's a bit of anxiety around that. And then the third one is around beneficiation. And the mines are concerned, and it's been a big topic of debate over years now, and they're concerned that beneficiation provisions are a little too onerous for them. We spoke to Iraj Abedian, who's an economist here in South Africa, and he says that the mines are looking at this beneficiation issue in a far too narrow process. So the upshot is we have more regulatory uncertainty at the moment. And remember that this bill has been in the making for around 3 years now, and it still hasn't been finalized. So we're at a bit of an impasse at the moment, Rama.
Indeed. The bill, as you say, has been in review for about 3 years or so now. It's coming up for second round of public commentary as well. But with elections coming up in 2014, really, can we expect any meaningful policy changes from the ANC between now and the time they go to the polls?
Well, that's an interesting point, because Faith Bakina, who's the chairperson of the mining panel or portfolio committee in Parliament, was at pains to point out that there's a difference between the ANC and the government. So in theory, there shouldn't be any issues, because the government has been at pains to point out that they're not actually going to make any changes to policy because they're looking at long-term sustainability. The issue here, though, is that there are around 500,000 odd voters in the overall mining sector. And if, as is happening in NUM, which is the ANC-affiliated union, starts losing power and, to the UMCU party, then you have an issue there, because the ANC will think very carefully about whether they're going to make any changes to try and maintain that vote. So again, we're in a bit of an impasse here. It's unclear, but government are making the right noises. Let's see if that actually will follow through before elections next year.
Indeed.
Rama?
We'll have to leave it there for the time being. Thank you very much for that update. That's CCTV's Angelo Coppola live in Johannesburg, South Africa. Now, a bit of commodity news for you. Oil prices across the world are heading straight up. Western powers prepare to make good on their threat of possible military action against Syria over the regime's there alleged use of chemical weapons. Now, Syria produces just a few thousand or so barrels of crude per day, but investors are concerned that a military strike targeting Bashar al-Assad's regime could further escalate tensions in the oil-rich Middle East. Remember, Iran is a key ally of Syria. The region is already racked by festering political crisis in Egypt and, of course, a few other areas as well. The West, led by the US, is edging closer to targeted strikes in Syria, which is accused of carrying out a gas attack on the 21st of August in which hundreds of civilians were killed. Reprisals or retaliations from an attack also raises a prospect of more turmoil in the oil-rich region, which saw crude prices across the world extend gains throughout the week. We'll certainly be keeping a close eye on commodity markets for you. Right now, though, a run through the equity markets in Africa. Some fairly decent days, except, however, for East Africa. The all-share index in Nigeria ending the day higher, up by about 0.3 percentage points. Pretty much the same story, really, in South Africa. The all-share index ending the day in the green. There were a bit of early losses in early morning trade, but that reversed towards the end of the day. These numbers, however, this is a 7-week low from the Kenyan equity markets. We're, of course, keeping tabs on the rate decision coming up in a couple of weeks. And the Egyptian market, after the announcement of that stimulus package, responding fairly positively, ending the day higher, 0.8% higher. That's business for you today. Back to Penina now for the sport.